Thank you for joining us on this special edition of Invest Africa. I'm Nozi Pombandra. Now, infrastructure development continues to be a major concern on the African continent. A call has been made to African governments to accelerate reforms that will encourage more private sector investment in infrastructure projects. Philani Nyalunga compiled us this report.
The economic growth in sub-Saharan Africa continues to rise from 4.7% in 2013 to a forecasted 5.2% in 2014, this according to the World Bank. However, this might change due to the continent's inadequate infrastructure. East Africa's largest economy risks a rapid debt escalation as it has committed to borrowing billions of shillings to finance mega public infrastructure projects.
Kenya's national debt is absolutely out of control. You could argue unsustainable. 80% of Kenya's debt is ODS debt. It has been the victim of very serious corruption. Allow me to say, suffice to say that every Kenyan, including a newborn, owes in national debt about Kenya shillings 30,000 each. That's about $400.
Another region's influential economy, Tanzania, has lost billions through poor transport infrastructure. This is delaying the country's economic growth, efficiency and competitiveness. The African Development Bank hazarded that Tanzania's ports, roads, railways, aviation systems and pipelines are in bad shape, and the worst of them is the port of Dar es Salaam. Tanzania-Zambia Railways, one of the region's biggest post-independence infrastructure projects, is still overwhelmed by derailments and breakdowns after almost 4 decades in operation. AFDB suggests that public-private partnership is the key to revive the overstretched and dilapidated transport infrastructure in Tanzania. PPPs can help public sector entities achieve better value for their money and increase innovation in their infrastructure provision of services. Africa's poor infrastructure is slowing its economic development. However, according to the UN report, foreign investment is helping fill in some of the gaps. Economic expansion in sub-Saharan Africa is projected at 5.4% next year and 2016. Philani Nyalunga, CNBC Africa, Johannesburg.
Joining me in studio to discuss transport infrastructure investment in Africa is Laverne Dimitrov. She's a transport sector specialist at the DBSA. Kunle Elebute, he's a partner and head of advisory services at KPMG in Nigeria. He joins us from our Lagos studios. And in our Nairobi studios, we're joined by Edwins Mukabanah. He's a transport sector chairman at Kenya Private Sector Alliance. And Gabriel, Negatu, the director for the East Africa region for the African Development Bank. To all my guests, welcome. Great to have you on the show. Kunle, let's come to Nigeria first. This figure is quite striking. 7 of the 54 countries in Africa have transport systems that are on par to global standards. Why do we have such a transport deficit on the continent?
Thank you for asking me to come to this program. I think the major issue is that, historically, governments have been the one investing in transport infrastructure. And they've left that area as the preserved area for government, which I think is myopic of governments in Africa, because there is appetite from the private sector to invest and manage the infrastructure in the transport sector. Because the biggest problem beyond even building the infrastructure is maintaining the infrastructure to very high quality, whether it's a railway line or highway or a port or airport. Because when you build the airport and it's built by government and run by government, over the years, and they don't have enough revenue streams to ensure they continue to invest in the airport and improve the standards of the airport and ensure that the traffic going through the airport is adequate for the investment. So I think the reason why we've gone backwards in the transport sector is because governments have not left that sector to private sector. Now there is private capital and private expertise that can actually build and run infrastructure projects in Africa, especially in the transport sector, whether it's ports or airports or railway lines or highways. So I think government need to open up the sector, because transport is the biggest bottleneck I see to the further growth of Africa's GDP. So if you're growing, we're probably losing 1 or 2% of GDP growth rate because of the lack of adequate transport infrastructure, and it's a big bottleneck. Even in Nigeria, for supply chain, for logistics, it's a huge bottleneck.
Right, Gabriel, let's throw this next question to you in Nairobi, picking up from the point that Kunle has made, that the state ownership of much of the transport infrastructure is in fact stifling the development of this infrastructure. Is this the same case in East Africa, and how do we turn it around if that is the case?
Yeah, thank you. Yes, indeed, this is also true in Eastern Africa, where public transport, by and large, has traditionally been the domain of the public sector, namely the government. It is only in recent years now we're beginning to see this shifting. And I think as to how we change this, you're now beginning to see transport sector that's profitable and of interest to the private sector. Therefore, the new approaches of public-private partnership, whether it's build, own, operate, or any one of those models, now allows the private sector to come into the sector, realize a meaningful profit, and still provide a meaningful service to the public. So I think this is the direction that it's a trend that's beginning to happen, and I'm confident that we'll see that more and more in East Africa.
Laverne, as you sit as the transport specialist for the DBSA, I'm quite certain that overlooking PPPs is a big portfolio that you're looking at. Are we seeing private sector companies coming to the party? Are there the right incentives in place to attract them?
Yes, we definitely are seeing a growth in the private sector, showing an interest in especially your big or your mega projects like your rail projects. They are quite interested to redevelop infrastructure that has been neglected. And one of the things that they're bringing with them is their technical expertise, because when this infrastructure actually deteriorated, a lot of our expertise was lost. So that, besides bringing their capital, that is really what we need. We also see there are ongoing projects in the region where the countries are having on the development plans where they're putting funding forward, and that attracts the private investor.
Edwins, we're talking incentives for private sector to come to the party when it comes to transport infrastructure. What incentives should be put in place if we had to rethink the way we're currently, or how government is currently approaching the private sector to ensure that we have robust participation from them?
Thank you very much. I think one of the biggest problems that has been preventing the private sector from venturing into this area has been the legislative or the policy framework that exists in most African countries. For Kenya now, I think there is a public-private partnership act that now enables us to be able to engage with the government and see that the policies or the rules of engagement are clearly defined for us to know whether we are going to venture in or not. This so much depends on the risk factor and how do we mitigate the risk. Because as private sector, we want to come in with a bit of risk mitigated, seeing like infrastructure projects are for a long period of time. And you want just to be sure that the risk factor has been taken care of before you put in a lot of your money.
Gabriel, I want to come back to you. I mean, as the AFDB, I'm quite certain you're sitting with multiple country projects or transport infrastructure projects that you have to consider for funding. Now, we've had a very interesting point raised by Edwins of a regulatory environment. How difficult is it then to work on projects where you have multiple countries who oftentimes have pieces of legislation that don't speak to each other?
Yeah, thank you. Yes, I think Edwin is right on spot in terms of the cross-border operations. But if regional integration is to be realized, and all of us, all of our countries in this region and in the continent are committed to regional integration, then infrastructure is the hardware that's going to integrate countries. Now, to do that, we've realized that building the roads is perhaps the easier part. You know, it's getting the regulations, the legislations harmonized, making sure that the non-tariff barriers at the borders are removed, making sure that there is a one-stop border post that allows traffic in both directions through in no time. You know, if you go to some of the border posts in this continent, you have trucks that are held up for 7, 8 days, 10 days, and so on. But that's not beginning to change, and that's the value addition of regional integration. If you, for example, go to Namanga, the border post between Kenya and Tanzania, or if you go to Busia, the border post between Kenya and Uganda, trucks that used to take a week to clear can now clear in hours, or perhaps a day or so. And this is continuing to improve. So the effort to harmonize the legislation through the East African community and other regional economic communities is beginning to bear fruit, and I'm confident that in the near future you'll be able to have this one-stop border post wherein in an hour or two you'll be able to zoom right into any of the countries you're traveling to.
Back to Lagos, Kunle, let's talk a little bit about whether what we're seeing in West Africa and in particular in Nigeria is a question of insufficient funds to be fueling infrastructure in transport, or is it a question of the projects themselves not being bankable? Where is the exact problem exactly for us not to see the infrastructure development that we should be seeing in a country as big as Nigeria?
Well, I think first of all, it's really around the political commitments to allow private sector to invest in the sector. I mean, I heard my colleague in East Africa saying that we need to have the right regulation, you need to have a PPP Act, you need to have the legislation. We've done that in Nigeria now for more than 10 years. So beyond legislation and regulation, there needs to be a commitment from government to say we want to engage private sector investors in the sector and open up the sector to private sector investment. Taking the major highways which have been built 30, 40 years ago and need to be expanded and need to be maintained properly and hand them over to private sector investors. Yes, you can do a competitive bid process, and it can be a DBFO or a BOT, whatever acronym you want to use, but there needs to be commitment from government to say, we really want investors to come into the sector. Now, once there's that commitment, backed by the commitment, you need to de-risk the sector. What are the key risks that lenders are going to look for before they can finance infrastructure? One of the key risks is there adequate traffic through that infrastructure. Now, as we know in developed markets like ours, there will be what I call suppressed demand. So if you do a traffic study today for a road or railway line in a particular situation, you will get X volume of traffic today. But we all know that there will be an uptick of traffic once the road is there. And that suppressed demand you cannot size today. So what does government need to do? Government needs to probably guarantee the traffic for the first 2 or 3 years after the road is put into place, saying that, look, we'll de-risk the sector, guarantee minimum level of traffic, allow lenders to come into to fund the project, and maybe for the first 5 years, put in a guarantee for minimum traffic. Now, if that traffic doesn't come, different story. If the traffic comes, then the guarantee can move away, and the project will pay for itself. The final point is that we then need to select the right type of transport investor that has the capability to actually build infrastructure, toll the road, for example, run the road properly, and maintain the road. Because you then find that politicians will pick their own political party supporters to hand them a road or an airport or a port, and they will not be able to, even if they build it, they won't run it properly. So again, it's all about the commitment to choose the right type of investor who can run the asset properly and make money for themselves and for lenders, but also provide a service to the users of the asset.
So Kunle is talking about sweating the assets there, but I see you nodding throughout his contribution. Yes,
I think it relates very much to your question. Is it an issue of funding, or is it an issue of getting the project up to bankable feasibility? Yes, there may be in some cases funding available, but sometimes it's also about the bankable feasibility. You may stipulate, rightfully so, the right traffic. But sometimes investors also look at, will this traffic, if you're a landlocked country, will this traffic reach the port? If it's on rail, for example, what will happen at the actual port? Will that traffic be able to be loaded onto your larger vessels and to be shipped to destination. So it is a whole integrated approach to the mode that has been selected. And sometimes the private sector investors come in and they see maybe there's a bottleneck at the port or there's a bottleneck at the rail yard, and then they make suggestions in terms of that. So these are all important factors.
On that point, you're going to take a short ad break now, but when we come back, we pick up the conversation looking at rail, ports, road and air infrastructure as we look at the broader transport infrastructure state in Africa. We'll see you in 2 minutes. Welcome back to Invest Africa. Remember that we do value your suggestions and your feedback, so please send us an email. That's to investafrica@abn360.com or interact with us on Twitter. Our handle is @CNBC Africa and the hashtag for the show is Invest Africa, or you can follow me @NoziPumbandra. Still with me, my guest Laverne Dimitrov, Transport Sector Specialist at the DBSA, Kunle Elebute, Partner and Head of Advisory Services at KPMG, joining us from our Lagos studios, and Edwins Mukabanah, Transport Sector Chairman at Kenya Private Sector Alliance, and Gabriel Negatu, Director for the East Africa region at the African Development Bank, joining us from our Nairobi studios. Now, before we went to break, we said we'd pick up on the conversation looking at the various sectors where transport infrastructure is very, very important. If we start off with air transport, and Laverne, I want to maybe bring this question to you. To what extent are we winning the battle of expensive air travel into the African continent? Because we're still seeing that the costs of air transport in Africa is far higher than any other parts of the world.
Yes, definitely so. There's still a number of countries that do take their goods, for example, via air transport because they do not have any options. For example, to a large extent in Ethiopia. But that is because they do have inadequate other infrastructure, like inadequate road infrastructure, inadequate rail infrastructure. And until that problem is really addressed, you cannot really look at immediate alternatives.
Edwins, in East Africa, we've just had the recent launch of jumbo jets, which makes it, I think, just about the third low-cost carrier on the African continent. Are low-cost carriers the answer that we've been looking for, that seems to be so elusive when it comes to bringing down the cost and access of air travel on the continent?
Yeah, I think we've launched the 787, that is a long-distance carrier, and we are using it for to be one of our budget airlines. And we believe that local solutions for Africa are going to be more beneficial to Africa than importing other solutions from elsewhere. We think that Africa needs the low-budget, low-cost airlines a little more than any other country because of the interconnectivity that exists between African countries. You realize that connecting from South Africa to East Africa for a long time has been a big problem. I think to Central Africa is still a big problem, and connecting to the rest of the world is even a bigger problem. And we want to promote the inter-African trade at Kenya Private Sector Alliance. We are happy with this, and we believe that this is going to be the best way. What we need is more airports to be put up in other towns, so that if we are talking from East Africa, we want to see airports developed in northern Tanzania, in northern Uganda, and in most parts of Kenya, so that we can have not only inter-country travel, but we can also have inter-region and countries all over the African continent, so that we can connect.
Kunle, coming to you in Lagos, and in particular I want us to revisit the Abuja Declaration, which one of its objectives was to hopefully see African governments opening up their airspaces so we can have air transport becoming a real vehicle towards integration. We don't seem to be winning that battle.
Yes, again, it's another government declaration that they want to open up the air skies to the aviation market in Africa. But again, it's not backed by proper investment in the infrastructure, because the airline business can only be as effective or as profitable as the quality of the airport infrastructure. And airport infrastructure is important for a number of reasons. You know, the efficiency of the airport, you know, the mix of the traffic coming through the airport, the way the airport is run, the way it markets the airlines, the services it provides to the airlines, you know, how it attracts airlines into a hub and spoke approach, you know, between long haul, regional and domestic traffic, and as well as, you know, large carriers and low cost carriers. So there's no airport strategy that I see except for perhaps Johannesburg in Africa. So the airports, you know, don't have a strategy. They don't have adequate infrastructure. They don't have airport managers who understand what the open skies declaration means for their infrastructure. And therefore, they can't attract the right kind of airline mix into their airports. So until we have that, you know, because the entire aviation sector is a business.
Yes.
You know, there are airports like Dubai that carry 40, 50 million passengers per annum, and they want to get to 100 million passengers in the next 5 to 6 years based on a strategic plan. And so you see the tie-up between Emirates and Qantas is a strategic rationale for that scope to increase the traffic coming through the airport. Mm-hmm. So I don't see any airport strategy in Africa. Johannesburg I can see clearly because they're the only airport today that can take A380s, and they built additional infrastructure for the World Cup. You know, whether they can optimize that infrastructure across Southern Africa and into East Africa will be a different story. Mm. But there needs to be some sort of, you know, coordination between Nairobi Airport in the east, Lagos in the west, and Joburg in the south, and those three airports can be big three hubs for Africa. In the same way, if you look at the US market, you got a hub in Atlanta, you got a hub in New York, you got a hub in I think it's in LA, you know, in Chicago. There's no reason why Africa cannot have its own airport strategy around three big hubs. And then those airports will make investments that will optimize the open skies declaration of the governments.
I think we might have to have an entire show looking at an airport strategy for the continent, but let's move from the airports and look at the railways. And Gabriel, I want to come to you with this in particular and looking at some of the projects that the African Development Bank is looking at in the East African region, specifically for a mode of transport that has suffered from underinvestment and very poor maintenance in the past.
Thank you. The rail sector clearly is perhaps the future in some sense for transport in Africa. But before I go to that, if I may, just on the air transport, I think we need to point out that this region, the East Africa region, is beginning to see a boom in air travel. Just almost every country in this region, from Sudan, from Khartoum airport to the airport in Addis, airport in Nairobi, in Dar es Salaam, in Kigali, every one of them is now going through an expansion, major expansions. And then the new low-cost carrier that you see coming in, coupled with implementation of the landing rights issues and some of the legislation, I think you will begin to see East Africa emerge as a major hub for air transport, both into the Middle East, into Asia, and into Europe. Now, coming back to the rail, yes, this is indeed the direction which most of our countries are going. As you know, Kenya is building a new rail that will go from Mombasa to Kampala to Kigali. I've just come back from Dar es Salaam, where we were discussing the central corridor, which will go from Dar es Salaam to Mosongati, Bujumbura, and all the way to Kigali. So again, in the East Africa region, this was an underpriced, underfinanced sector. But now, with greater private sector participation and commitment from government and development partners such as the African Development Bank and others, the rail sector is now beginning to emerge as the direction of the future, particularly for bulk transport of commodities and goods, plus passengers. I think the rail transport is going to be a major player in the years to come.
Let's get a comment from you, Laverne, and it could possibly be the final one, looking at rail, in particular with the recent deal that we saw with Transnet. it seems as if there is some innovation in the way that they've approached this particular deal. What are the lessons that our African counterparts could pick up from this Transnet deal?
Well, first of all, with Transnet, they had a very good support from government. It's all written down in our National Development Plan. I think we all have heard in the newspapers about the National Development Plan and how much we are spending of our GDP on that plan. So first of all, it's very good lessons that we're learning. Also, Transnet has gone forward and identified corridors that will link South Africa with Swaziland, with Mozambique, and they're even putting their own money into financing those projects. For example, now they are busy with plans looking at expanding the link on the Swazi rail side, and about 5 billion rand would be spent on that. Half of the infrastructure will be built by Swaziland and half of the infrastructure will be built by South Africa. And the lesson learned also there is that we are sharing our technology, we are sharing our locomotives, our wagons. Not only are we doing that, we are building local capacity to build those infrastructure. We are also now picking up on sharing our information and technology and telecommunications infrastructure, because it's all good and well to have your locos and wagons, but you also need intelligence on ICT. So those projects are going forward in tandem, and we're also sharing this knowledge with our other counterparts in the region.
Right. So it sounds as if lots of lessons to be picked up from that Transnet deal that seems to be pioneering new ground in railways, not only for South Africa, but for the broader SADC region. We have unfortunately come to the end of this week's episode of Invest Africa. Thank you again to all my guests. Now, Bruce Whitfield is up next as he unpacks the latest news from South Africa's economy on Tonight with Bruce. Until next time, it's goodbye and thank you for joining us.